Hey everybody, Felix Staffelbaker here. I wanted to make a video about the China miner FUD crackdown and why it's kind of relevant to what's happening now. If there's a lot of people who have been complaining about the Chinese miners controlling a majority of the hash rate, and what that means is that the computers working together to solve the complex problems on the Bitcoin blockchain all work together, and when there's a majority of them in a certain geographic location, it could incentivize bad behavior, or to be able to change the protocol in a way that would be bad, or just have more influence and less decentralization overall. And what a lot of people aren't realizing here is that it's being under the cover of Elon Musk energy FUD and saying that the Chinese miners are using too much energy, they're not using green energy or renewable energy, so they need to crack down on them. They're using coal, so you need to crack down on them so that they won't do that. But what that really is doing is allowing for those miners that would have been mining there to geographically relocate to other places that have the cheapest renewable energy, and allows for more decentralization, allows for more security of the entire network. Because if China were to, and you can't actually ban Bitcoin, but if China were to stop everyone from mining in China, then you could see a point like what we had several months ago, where the hash rate fell so hard. And if you notice, price follows hash rate. So when the hash rate goes up to all-time highs, there's a difficulty adjustment of the blockchain every 2 weeks. You can see that the price will follow that in a major way after the fact. Same thing with when several 100 miners shut off all of their equipment due to China doing some tests or whatever to try to go in and see what was happening. The hash rate plummeted, and then shortly after, we had a very large short-term correction in Bitcoin. So one thing to always remember is price follows hash rate. So you want to check to see how the network is computing and how many computers are mining Bitcoin, because the more that are mining, the more secure the network, and increasing in price is sure to follow. But all those miners will go to a geographically friendly, low energy cost, green, renewable place to mine their Bitcoin. And a lot of it too is taking these at-home miners, people who have ant miners, or the whatever they're called, like the G5, I forget what the actual name of the graphics cards that you have at home that you can just plug 7 of them in, and ant miners, Bitmain miners, those kind of things. This is the shift from, we're going away from some kid in his mom's basement running a node to secure the entire network, to where if that were to go down or something happens there, you're losing that hash power out of that machine. 2, large corporations and large entities and new mining companies will be sprouting up and actually able to handle the infrastructure and handle the network load and making it more secure. A lot of people are starting to argue that, that's actually more centralized and taking away from decentralization. But you have to understand that everything is a give and take, And when what you're giving up, like when we accept volatility in the crypto market, we're accepting volatility for immutable, unconfiscatable, hard, scarce money, as well as volatility to the upside. You don't just get volatility to the downside. You can't have 1,000% increase in your portfolio and not have volatility. That's not how it works. But a lot of people are saying that, oh, everything was so decentralized when you had 100,000 random people running the network to now having, 10,000 highly specialized companies running Bitcoin software with dedicated server farms. And I don't really see that as a centralization move. I see it as a hardening move where now those same companies are literally responsible for the actual network and the securing of it, to where now, even if we have a power outage in some area, they've got $30,000, $40,000, $50,000 generators that are able to keep everything up and running still. We're not at that point now where it only takes one miner to keep running the blockchain and then everybody else can come back online. Yes, that's still the case, but we're not at that point now. We're at the point now where companies like Amazon, companies like Google, companies like Northern AG working with Block One have the infrastructure and server farms to be able to keep this thing running with the server load that it's going to require when the transactions come in. So I don't think a lot of people are taking into account just how significant it actually is, because of the amount of people that are coming out of mining and the amount of companies coming into mining to be able to secure the network in a more robust way. So I just want to put that out there. Stoffel Baker out.